Hey guys, hope you're all doing well and having success trading. I just wanted to make this quick video today because I had a great day in the markets. And today, what happened yesterday and today is an example of a thing that I talk about fairly often in my book, which is do not trade scared. There's two things that you should always avoid when you trade. That is greed and fear. The two emotions that are both very natural to have, but you should try to avoid at all costs. Don't trade greedy and don't trade scared. So today I closed a few trades. I actually traded more than I usually do. Most days I'll trade one ticker, sometimes two. Yesterday I traded the SPY, the Qs, and AMD. And what I thought was going to happen yesterday and didn't happen actually happened today. And there's where the lesson of today's video comes in. Don't trade scared. Now, a lot of times the trade won't do what you think it's going to do right when you think it's going to do it. So all that means is that oftentimes you'll end up being right. You just won't be right in the time frame that you think you're going to be right. So in hindsight, from my trades yesterday, I was right. What I thought was going to happen did happen. It just didn't happen yesterday when I thought it was going to happen. It happened today. And therefore, yesterday when it didn't do what I wanted it to do, there are a couple of things that I could have done. The first thing is to simply close at a loss when it continued to dip, because yesterday afternoon there was a fairly large chunk of time where price was just going down and down and down. I had bought call options. Last week was the most successful week we've had all year. And my thinking is that the rally was going to continue. And so there's a thing that I saw early on in the morning that made me go long pretty early in the day. I'll point this out in a minute when I get into the charts with you guys. But the point is, it didn't do what I thought it was going to do. So instead of just freaking out and getting scared and closing for a loss when it continued to nosedive throughout the afternoon, I looked at my support and resistance levels. That's where technical analysis comes in. You have to have solid technical analysis. And I realized that even though the price had considerably fallen throughout the day, it had not hit one very critical level that I had identified from a couple of days earlier. So that was my stop out point, which was still below where the price was at its lowest point of the day yesterday. So if I had just gotten scared like a lot of dumb money traders do, the second it goes against them, they freak out and close their position. If I had done that, I would have lost hundreds of dollars yesterday, but I didn't. I stayed in. Today, you all saw what happened. It turned around. It did exactly what I thought it was going to do yesterday, but today. And so this afternoon, I closed my positions actually before the lunch break. I closed the positions, and I closed them for a 30% profit of $700. And this is trading relatively small size because, like I've said before on this channel, I'm deliberately placing smaller money trades, at least at first, like around $2,000 or less, just so that you all can see how effective you can be with using not a lot of money. So for less than $2,000, you could have also made $700 and a 30% P&L if you did the same thing that I did yesterday. So I'm going to break it down now and get a little bit more specific about exactly what I saw, why I did what I did, and then hopefully it'll be easy enough to understand. So let's get into it. Okay, so here we see my detailed entries and exits, and you'll see that I made $700 on the day. My overall P&L was 30%. I made $359 on AMD, $225 on the Qs, and $116 on the SPY. So let's get into the charts now, and I'll show you exactly when I got in and why I stayed in, and how this all played out. I'm not going to go minute by minute like I've done with a couple of my other videos because that would take too long. So I'm going to be a little bit more general with it. And if you want to take a look at the charts for yourself and cross-reference them, you can do that. So here we see the Qs right here. This is today, where my cursor is. This is yesterday. Now, remember I said the thing that I thought was going to happen yesterday is actually what happened today. Well, this right here, this is what I thought would happen yesterday. As we can see, yesterday that did not happen. Why did I think that this was going to happen? Well, first you can look at pre-market. You see we've got the end of the day 2 days ago. We've got our high right here, right at about 369. And then we kind of just consolidated throughout the night. Nothing really happening. Slight uptrend, but not really. And then we can zoom in. Right here, this is yesterday morning. We get this big green candle up. Now this is yesterday's high-low. It broke that level, came back down. It touched this big area of the indicators, the 200 EMA, the alligator indicator, which is a collection of EMAs in itself, and then it bounced off of that. And so I essentially got in after it did this bounce, right after it had topped this little high right here. Now this ticked above this high of the day, even though the day at that point was only 8 minutes long. But here was our previous high. As soon as it ticked over that, I got in because I thought, okay, we're already above previous day's high. We're above all the moving averages. It broke above the morning's session high already. Okay, we're going to take off. Well, as you can see, it didn't take off. It just kind of consolidated for a while. Right around this area, I was just sort of treading water, not really making or losing much of anything. Then, because I bought calls on SPY, Q, and AMD, then price fell. And at this point, it was definitely very scary. I was losing money. And right down here was the lowest point of the day. This is when I was down hundreds of dollars at that point. Now, I did not get out, obviously. Why did I not get out? Well, let's take a look at this red price level here, and I'll explain that a little bit. So if we zoom out a bit, now you can see we ended up having a very, very pronounced double bottom here, but I couldn't see that at this moment. At 12:20 p.m., I had no idea that there was a double bottom. All I saw was price had just fallen out really hard. But what I did was I looked left, and what I saw was, okay, we've got this area right here of a fairly big involvement. Now, you've got a lot of price action right here at this level. You've got a lot of price action right here at that level. So to me, this was a fairly significant level to watch for. And that's why you can see I made the price level line right there. And then we move right. And then it basically just bounced right off of that support level that I thought would be there. And it was there. Now, if price had continued to break lower and lower and lower, after it broke through this support level, I would have been forced to get out, because at that point, who knows, and I was already down hundreds of dollars, and I don't want to see my contracts go to zero. So I would have got out at that point. Well, it didn't. It bounced off. Okay, cool. Came back down, double bottom. At this point, once we were on the right side of this double bottom, I was fairly confident it was going to do what I thought it would do. So I know that most of the time I say never hold overnight. And I mean, that's a good rule to have. You shouldn't hold overnight if, in most situations, you shouldn't hold overnight. But for me, at this point, I was presented with two choices. I either hold overnight and see what happens, or I close for a loss. And in my mind, there was still a lot greater chance of the upside, because I thought that the rally was going to continue. The huge rally that we had last week, I thought that was going to continue. So based on that information, it was a smarter play to just hold my contracts overnight. So that's what I did. And as you can see, we're just sort of consolidating overnight. And then right before the open, we kind of start to get this direction, and bam, we're just off to the races today. And then, so today I basically added in, when we got to right about here, I added in a couple contracts, because, at this point I was about even. And I thought, okay, I'm already holding a couple contracts on AMD. I'm going to add in when it bounced off the 200 here. Now, we're looking at Qs, but if we look at AMD, it did essentially the same thing. We've got the 200 and we see it playing around and bouncing off. So I added in, and then on Qs, you can see I at 950. So right about here is where I actually got out my last contract of the day. I had been slowly peeling out the few contracts that I had as price just continued this really strong move up. And then I got out my last contract just about top ticked it, honestly, because if I had continued to hold after this, I might have made a little bit more right over here, but you also have to think about your time decay. And both my Q and my SPY options were expiring today. So I definitely did not want to hold them into the afternoon session when today is my expiry day for these options. I wanted to get out definitely during the morning session. So as soon as I saw that it looked like price was kind of starting to stall, I got out. And in hindsight, this was a great time to get out. Don't close out the positions until your technical analysis tells you that it's time to stop out. And in my case, I got really, really close to it, but I didn't actually break the level that I set. So I stayed in the position, held overnight, which is not something that I advise doing, but occasionally it's in your best interest to do so, just like this example right here. You don't always want to have the diamond hands, but sometimes diamond hands is exactly what's going to give you the gains. And that's what happened right here. So diamond hands for the win in this case. All right, so there you have it. The moral of this story is learn how support and resistance levels work and why they're so important when you are trading. And then when you are trading, if something goes against you, ask yourself, am I still on the right side of my support level or not? And if you do have a little bit of room to go before you've broken that level, don't freak out, don't get scared, just stay in the trade until it's actually time for you to get out. And if you can avoid the temptation to trade either scared or greedy, you will have a lot more success as you move forward with your trades. So that's it for right now. Thanks again for watching. And make sure you do hit the like and subscribe button if you like this content. And also, if you want to get a deep dive into the strategy I'm using, my book, Secrets of the Lone Wolf Trader, it's available right now. So pick it up if you haven't already. Thanks a lot. See you next time.